Good morning, everyone, and welcome to the Mortgage Solutions Buy-to-Let Forum. My name is Richard Rowntree, and I'm the Managing Director of Mortgages for Paragon Bank. I'm delighted that so many of you have taken the time out of your busy diaries to join me today. I also know that many of you will be looking at this from a professional development perspective. So let me just have a look at what we're going to be talking about today. So how has the market reacted to coronavirus, and why is buy-to-let in a good shape to weather this storm? The fundamentals that continue behind the demand for the drive of private rental property, and the opportunities we're seeing in the market. So let's face it, we've not experienced anything like this in our lifetimes. What started with a few media reports coming out of China quickly hit us like a tidal wave. But while there's clearly been market shock, there's also been resilience. In the buy-to-let space, product availability retracted sharply, but it has slowly climbed back, as you can see from this Moneyfacts chart. Landlord sentiment was hit very hard, but that hasn't necessarily translated into behavioural changes as of yet, and I'll touch on this later. In fact, landlord demand has returned strongly, and visits to the Paragon's intermediary portal site jumped 65% in the week after the housing market reopened in May. We have seen landlords asking for mortgage payment holidays, and which we've supported. Just under a fifth of landlords have requested a payment holiday, but the vast majority of these are saying that they no longer seek an extension of that. And we're seeing some of that as some are coming to the end of their first round of payment holidays that started in March. But there was no doubt operationally, there was a big challenge on all of the banks. The larger banks had severe operational issues, particularly those with overseas impacts as well. So other countries being impacted and having to shut down operations. And we saw large withdrawals from the market. Now that was predominantly due to impacts on operations rather than what we saw in the financial crisis, but clearly had an impact and actually more so in the residential markets. It had been a challenge and some withdrew altogether from the buy-to-let market, but we are starting to see them return in some form. At the other end, we saw non-banks being impacted by funding issues and not having access to the central government schemes or the Bank of England schemes in terms of terms funding has been a challenge for non-bank lenders. Some lenders shut their doors to new business almost immediately, but they are coming back tentatively and slowly, but it's good to have more choice back in the market. And then in the middle, we saw mid-tier lenders and building societies who seem to have fared slightly better. Yes, they've had operational difficulties, but on a whole, they've maintained their service and lending capability. At Paragon, we've remained open for business, and over 90% of our workforce was able to work from home within days. So generally speaking, the buy-to-let sector, and indeed the wider mortgage market, has demonstrated resilience. Part of the reason for this comes from the lessons learned in the last financial crisis. I'm sure that many of you will remember the images of people queuing outside their banks in 2007, and then the financial crisis which subsequently ensued. But actions taken following that crisis means the sector is much better prepared and in a stronger position than it was in 2007. Lenders are benefiting from more liquidity, a stronger funding base, improved governance, better quality assets on their books, and a greater level of capital protection. You couple this with quick and decisive action from the government and the Bank of England, we haven't seen the lending fallout that this crisis could have caused. Buy-to-let in particular is a segment of the market that has sharpened its focus on improving the quality of lending since 2007. As well as being well positioned to withstand shocks to the systems, it also offers very strong asset quality. In 2007, 48% of buy-to-let lending was at a loan-to-value of 75% or below. Today, this stands at 6 out of 10 loans. Conversely, loans written at 90% LTV or more stood at 15% in 2007. Today, they're just above 5%. Arrears in buy-to-let have consistently outperformed the wider residential market and have fallen every year since 2010. And as you can see, fewer than 1 in 100 buy-to-let mortgages are in arrears of 3 months or more currently. Plus, the sector has strong counter-cyclical characteristics. If people are feeling uncertain economically, demand for rented property typically rises. There's already strong tenant demand for private rental sector property. We'll come on to some of the reasons for this later. But estate agents groups are reporting a very strong level of letting inquiries pointing to a V-shaped recovery. The durability of buy-to-let is evidenced by the graph you'll see on this slide. This shows how quickly the market recovered following the credit crunch, plus how it started to grow again following the regulatory and tax changes towards the end of the last decade. This slowed the buy-to-let purchase market considerably. In fact, recent figures from UK Finance show that buy-to-let activity in the first quarter of this year was up 7% on 2019, continuing the strong end we saw in the final quarter of last year. Total outstanding balances for buy-to-let currently stand at 261 billion, and this equates for around 18% of all lending. This shows how the sector has grown over the last 25 years. The expansion of buy-to-let has been driven by the structural increase in tenant demand. Simply put, for a myriad of reasons, people want to rent more property than they did 20 or 30 years ago. The private rental sector is now home to 4.6 million households in England alone, just under 1 in 5 households. The size of the private rental sector has doubled since the early 2000s, and there's clearly more need for rental homes given the forecast population growth and societal changes. So if we just consider some of these factors driving the growth, we can understand why. Net migration has been a major contributing factor, jumping rapidly at the start of the millennium. Even though we've seen annual fall since 2015, 258,000 more people moved to live in the UK than emigrated in 2018. That's from the latest government statistics we have. It is a number we don't expect to drop substantially, even with changes to our status within the EU. Student numbers have grown significantly. In 1980, the number of students in higher education stood at 19,000. Today, that figure is 2.4 million, 485,000 who come from overseas. Household sizes have continued to fall, and while the number of households continues to increase, if you look, the latest available figures show there are 27.6 million households, up by 1.7 million a decade previously. The number of people living alone has grown, surpassing 8 million in 2018, 300,000 more than the previous year. And there's strong increases in women between 45 and 64 and men aged 65 to 74 who are living alone. And this correlates with the increase in proportion of over 55s living in rental accommodation. And then finally, the average age of first-time buyers increased, and this currently stands at around 32 years of age. Now, clearly, affordability has been a cause of this, but not everybody in their 20s wants to own a property, or at least not yet. Priorities have changed from previous generations, and many people rent out of choice rather than jump on the property ladder at the first opportunity. For many, the private rental sector doesn't just provide a house, it provides a home, a good quality long-term home. Over half of tenants stay in their home for more than 5 years, and a quarter over 10 years. Just under 4 in 10 privately rented properties provides a home to a child. A vibrant, well-funded private rental sector is vital in meeting forecast levels of tenant demand and enabling economic fluidity. We all know the sector has suffered from reputational issues in the past, but we hope that the perception of rented property is changing, and many people from many walks of life are proactively choosing to rent instead of buy. Instead of the tired stigma of the reluctant renter, I believe we should now be in the period of the relishing renter. Part of the reason for the change in perception is the improvement in the standards of private rented property. As you can see from the slide, there is clear correlation between the growth in the buy-to-let market and improvements in the quality in the property in the private rented sector. A 48% reduction in non-decent homes in standards since 2007. More homes that meet energy performance requirements, and a 54% decrease in hazardous homes. So, looking forward, what are we seeing from tenants and landlords, and what opportunities can that create? As I referenced earlier, we're seeing strong levels of tenant demand, and a number of indices are pointing to this. Zoopla reported rental demand is now running higher than early 2020, and this is ahead of the key autumn months for the market. So this very much points towards a V-shaped recovery. Rightmove recorded a 33% increase in tenant demand in the week after the housing market unlocked. And on Monday, the 18th of May, saw the highest level of rental demand ever recorded in one day on Rightmove. The number of valuation appraisals for letting properties in the week ending the 6th of June was the highest number on record, 19% above the 5-year average, according to Knight Frank. And Hampton's international data showed 70% of tenancies that were due to end in March were renewed, highest renewal level recorded in any March since 2008. In terms of landlords, the picture is a little bit more mixed. What we do tend to note with landlords is the divergence between sentiment and actual behaviours. Landlords can be a pessimistic group, but tend to be more resilient when it comes to the actual performance of their portfolio. Our research shows that confidence has been severely impacted and that between 2 and 5% believe they may end up losing their business. They feel that COVID-19 debts will cast a shadow over the next 12 to 24 months. But there are positives. Like buy-to-let, landlords are seasoned, experienced, and take a long-term view. The average Paragon landlord has held property for 18 years, and typically the landlord expects to continue to hold it for another 16 years. Market data shows that despite the wider circumstances, profitability is yet to be hit, with 83% of landlords making a profit from their lettings activity in line with their profits before this crisis started. And landlords looking for acquisition opportunities, on average, another 12% are looking to buy in the next year. As with every crisis, there is an opportunity, and this situation is no different. We're all looking at coronavirus and asking, how will it change how we live? It's certainly something we're considering at Paragon. For example, where will people want to live in a post-coronavirus world? It's looking at the Rightmove survey showing that half of renters are looking for something different, such as a bigger home, pet-friendly, or near to outside space, access to the countryside. Will the pandemic accelerate the shift in high street to more living, rental, and socialising spaces? We've certainly seen some indications of that in the recent announcements for the government in the build strategy. Not all retailers will return, and we could see more units available in high street locations that could be converted. But what about the future of work? The past few months has taught us that we can work remotely successfully. We don't need to live near to the offices we work for. And how could landlords respond? They must be alert to these opportunities. For example, can they examine opportunities in semi-commercial to convert retail units into living space? And this will certainly open up new markets. Demand for property may increase in areas of natural beauty outside the traditional commuter lines. If you're traveling to the office 2 days a week instead of 5, you may be prepared to travel for longer on those days. And you're trading in this for more outside space, a bigger home, and it's definitely an opportunity. There's no defined answers, but landlords have a proven ability to react quickly to shifts in tenant demand and respond to changing needs. So what type of landlord is looking to buy? Our research show that with 20 plus properties, they're more likely to purchase. And of those that are looking to purchase, landlords will add an average of nearly 2 properties. Those with a buy-to-let mortgage are 3 times more likely to buy again with those that don't. Plus, those with at least 1 limited company property are more likely to be looking to buy than those without their limited company. What I am confident we will see is a result that the virus has accelerated the professionalism of the sector. This was well underway even before 2020, and it will continue to grow in my view. The larger scale landlords will continue to drive, and they're typically better equipped to spot opportunities. They have the financial capability to purchase and are experienced at managing through economic cycles. So here are some verbatim comments from landlords taken from one of our recent surveys. There is a lot of positivity and resilience built into this sector and into business models from the landlords themselves. Demand for their product is high and growing. Landlords are investing and improving the stock of the rented property available. They're also supported by strong, committed lenders that have a deep understanding of the buy-to-let market. Yes, we know there are concerns out there. Yes, we know we're yet to see the full impact of how this plays through. And as we start to see that move into people coming off furlough, what will be the impact on unemployment? Will students return? So there's still lots of unanswered questions. But amidst all these challenging environments, I would like to take away a key message to say there are very, very strong opportunities for you as brokers to help your landlords thrive in what will be a different and a new normal environment for private rental sector and buy-to-let. Thank you for your time today and enjoy the rest of the day.